Well, let's stay in the US because traders on Wall Street have been celebrating a new record on stock markets, and those gains look set to continue today. Let's have a look at the scene now at Friday's final bell. Cheers and applause all round look. In New York, the S&P 500 closing on a record high. It's now up 35% since that low back in October 2022. And this morning, the Nikkei in Japan also broke record highs, and European indices, they've also forged higher as well. Well, let's bring in Janet Moy from Brewin Dolphin. Always a pleasure, Janet. Hi there. So, looking at this, we tend to look for technicals, don't we? The market talks about bear markets, bull markets. We've been in a pretty big bear market. Have we turned a corner, do we think, now, and are things picking up?
Hi, Mark. Thanks for having me. Yeah, I think there are several reasons that markets are cheering at the moment. I think primarily it is the expectation of rate cuts. So the markets currently expect about 5 rate cuts in the US this year, which is a dramatic change from the aggressive rate increase environment we have seen in the past 2 years. So that's a reason for optimism. And secondly, I think there is a higher consensus view on the US achieving a soft landing, meaning that the economy can keep growing even though it is growing at a softer pace. So I think these two factors is a very strong reason why the markets are cheering. And of course, there are other factors like the enthusiasm on artificial intelligence. We saw particularly those semiconductor companies rallying in the share prices.
Yeah, does it feel like, and incidentally, the markets in America have just opened and they're up even more than expected this Monday. Worth pointing out, though, that it's a bit of imbalance here. We do get some companies, the share prices plummeted, the values have gone down, while the other industries have really sort of kicked on. Is it still looking like there's a bit of lack of confidence out there until this really sort of cements in this turn?
Yes, there has been a bit of a divergence. So last year it was primarily led by the technology companies, the mega cap space. And I think this year the rally could broaden a bit, given that we may get rate cuts and a soft landing scenario. So I do believe that we will see a broadening and a more sustainable equity rally in 2024. But there will still be volatility ahead, given there is still a lot of economic uncertainty, for example, on the geopolitical front. So I do think that the markets may continue to favor the tech mega caps because the structural theme of artificial intelligence is just very strong, and it is still in the early innings of that playing out.
And what can we look for briefly, Janet, over the next week or so? We've got some more economic data coming out. Interest rates is the big thing, isn't it? When will they be cut? Is it the commentary now we're looking for, really, from the Fed, for example?
So this week we've got the Bank of Japan and the European Central Bank policy meeting, and both of them are expected no change. So I think people will focus on European Central Bank. So far they have kept a pretty hawkish stance. So we'll see if there are more clues that interest rate could be cut this year. And in terms of economic data, of course, people will still be looking at the evidence of a soft landing. And actually this week we are seeing a lot of corporate results. So we'll get big names like Netflix, Tesla, Intel reporting. So investors will be closely watching this.
Yeah, we will indeed, Janet. Thank you so much for your chat time there. Janet Moy from Brewin Dolphin.